Did you know that nearly 70% of middle-aged Americans worry they won't have enough money for retirement and feel lost when it comes to earning effectively? Imagine the journey of investors like Warren Buffett, who started with limited capital, but through a transformative money mindset and smart asset management strategies, built lasting wealth. In this article, you'll uncover the closely guarded secrets behind the top 5 financial investment channels for 2025, learn how to sidestep common pitfalls, and gain practical tips to supercharge your returns. Don't miss the finale, where we reveal the ultimate golden key to true prosperity. 1. Real estate. In an era when inflation is eating away at your savings and traditional interest rates no longer pack the punch they once did, U.S. rental real estate shines as a powerful weapon for middle-aged investors seeking long-term wealth and rock-solid asset protection. From suburban couples craving convenience to vacationers booking charming Airbnbs in Miami or Orlando, surging rental demand promises both steady cash flow and lasting appreciation. This isn't just a path to sustainable riches, it's a smart move to diversify your portfolio, curb risk, and safeguard your capital against the whims of the market. This investment approach is remarkably flexible. You can buy turnkey service apartments or suburban townhouses, even charming villas for short-term Airbnb stays, whatever suits your style. And if you'd rather stay hands-off, simply invest in publicly traded REITs on the NYSE or NASDAQ, owning a slice of expertly curated properties and collecting steady quarterly dividends without worrying about repairs, tenant hassles, or rent collection. The advantages of investing in U.S. rental real estate shine through in 2 powerful ways. First, that steady monthly rental income lets you put money management strategies into action and build generational wealth. Your tenants' rent checks not only cover maintenance and property taxes, but can also be reinvested to expand your portfolio, fueling truly sustainable riches. Second, U.S. property values tend to climb over time, especially in areas with booming infrastructure, top-tier schools, and quality health care. That means your home doesn't just hold its real value against inflation, it appreciates, driving long-term gains and anchoring your journey toward enduring prosperity. The real-world benefits for investors are unmistakable. With a steady stream of passive income, you can confidently cover retirement expenses or maintain your desired lifestyle without relying solely on a dwindling savings account. At the same time, you're shielding your capital from soaring inflation, preserving the dollar's purchasing power year after year. Even as prices climb, rental rates and property values tend to follow the market's upward trajectory, delivering a powerful 1-2 punch of regular cash flow and long-term appreciation. It's the ultimate proof of smart money thinking, pairing rock-solid security with compelling returns. Investing in rental real estate also sharpens your overall asset management skills. Owning property means tracking maintenance expenses, screening tenants, even navigating mortgage origination and refinancing to snag lower rates. This hands-on process not only deepens your personal finance know-how, but hones critical talents, negotiation, strategic planning, and risk assessment that are the cornerstones of lasting wealth. And thanks to today's property management apps, day-to-day operations have never been simpler, saving you precious time and energy while keeping your investments running like a well-oiled machine. To embark on your rental real estate journey, start by defining your return targets, risk tolerance, and management capacity. For U.S. investors, acquiring 1 or 2 properties in areas with a growing young population or high rental demand near universities, tech hubs, or resort destinations often delivers attractive yields. If your budget is limited or you'd rather minimize operational headaches, buying shares in a REIT is an excellent way to enter this market with modest capital and hands-off convenience. In summary, U.S. rental real estate is the ultimate smart wealth channel. It shields your capital from inflation while delivering steady, long-term income. It's your blueprint for building lasting prosperity and leaving a rock-solid financial legacy for the next generation. Start today. Review your personal finances, map out your first acquisition, and turn your dream of real wealth into reality. 2. Blue chip stocks. Shares of tech behemoths like Apple, Microsoft, Amazon, and Google are more than just icons of groundbreaking innovation. They represent the ultimate investment vehicle for middle-aged Americans intent on building sustainable wealth. Thanks to their razor-sharp liquidity on the NYSE and NASDAQ, you can effortlessly buy or sell shares at a moment's notice, precisely matching the flexible income needs of investors who, though no longer in their 20s, remain as dynamic as ever. Owning a stake in these blue-chip names means stepping into the eye of the global digitization storm and steadily sharpening your asset management prowess year after year. What truly sets blue-chip tech stocks apart is their ironclad ability to deliver consistent revenue and profit growth quarter after quarter, even in the face of short-term market turbulence. Industry titans such as Apple and Microsoft have repeatedly outdone themselves, reporting double-digit increases in sales and returning capital to shareholders through regular dividends. This dual engine of capital gains and dividend income means that, rather than panicking at the first sign of volatility, you'll maintain a positive money mindset, seizing every market correction as an opportunity to amplify your holdings rather than selling out too soon. But the benefits of blue-chip technology stocks extend well beyond today's gains. They lay the groundwork for intergenerational wealth. By assembling a portfolio of high-quality equities, you position your children and grandchildren to inherit not only the increasing market value of these shares, but also the ongoing passive income from dividends. These combined streams of cash flow and long-term appreciation allow you to balance short-term objectives, such as supplementing your current lifestyle, with far-reaching aspirations, creating a springboard for wealth that doesn't wait until retirement to come to life. Getting started on this journey is straightforward. First, open an online brokerage account with a reputable firm. Then hand-pick your blue-chip stocks based on rigorous fundamental analysis and emerging industry trends. Apply sound money management practices such as dollar-cost averaging, which smooths out purchase prices over time, and an annual portfolio rebalance to reduce risk and capitalize on market adjustments. Keep a vigilant eye on quarterly earnings reports, stay informed of the latest developments in the tech sector, and continually assess your own risk tolerance so you can adjust your weightings and optimize your personal asset management strategy. For middle-aged investors, blue-chip tech shares are more than just a way to generate income. They represent the cornerstone of a smart wealth creation strategy designed to preserve your lifestyle and power your retirement goals. By fusing a long-term vision with disciplined investing and an open, growth-oriented money mindset, these technology titans become the leverage that propels you steadily toward the question on every investor's mind: how do I become truly wealthy? Start today by clearly defining your return targets, articulating your risk appetite, and mapping out your capital allocation plan. With each thoughtful step, you'll transform your financial dreams into tangible reality, ensuring you and your family benefit from the engine of innovation for decades to come. 3. ETFs and index funds. Exchange-traded funds and index funds have rapidly become the go-to vehicles for middle-aged American investors intent on building sustainable wealth. By mirroring the performance of major benchmarks such as the S&P 500 or NASDAQ 100, or even specialized sector indices, these funds deliver broad market exposure with minimal management fees and unparalleled transparency. When you invest in an ETF, there's no need to spend hours hand-picking individual stocks or bonds. The fund's portfolio is already pre-packaged with representative tickers that cover an entire index or industry. Whether you're just beginning your journey to discover how to make money in the stock market or you've already accumulated years of money management experience, ETFs stand ready to simplify your path to long-term prosperity. What truly sets ETFs and index funds apart isn't just their rock-bottom expense ratios, often a mere fraction of what actively managed funds charge, but also their trading flexibility, akin to a single stock. You can buy or sell shares on the NYSE or NASDAQ at any moment throughout the trading day, empowering you to practice disciplined dollar-cost averaging and reduce the emotional strain of market turbulence. With an initially modest capital outlay, even a small nest egg can be diversified across multiple ETFs that match your personal risk appetite. This ease of access ensures that middle-aged investors, in particular, can deploy savings prudently and automatically, steering clear of the pitfalls that come from trying to time every market swing. Another transformative advantage of ETFs lies in the built-in diversification they offer from day one. By owning a single fund, you effectively spread your eggs across dozens or even hundreds of baskets, reducing single company risk and shielding you from the systemic shocks that can decimate narrowly focused portfolios. This structural risk mitigation is a cornerstone of prudent long-term investing, allowing you to set your sights on generating stable, passive income over the years to come without the angst of watching one underperforming holding drag down your entire strategy. In practical terms, this means that your portfolio can absorb shocks more gracefully, maintain smoother growth, and give you the confidence to stay committed to your wealth-building plan. The real, tangible benefits of adding an ETF to your lineup extend far beyond saving time and effort in asset management. They also guard against the all-too-common temptation to time the market. Attempting to buy at the absolute bottom or sell at the very top is a high-stakes gamble that often backfires. By automating periodic investments into index-tracking ETFs, you harness the power of average cost accumulation, smoothing out purchase prices over time and neutralizing the impact of short-term price fluctuations. The outcome is a steadier, more resilient portfolio that aligns seamlessly with both your pre-retirement and post-retirement financial roadmap. To begin your ETF journey, start by crystal clearing your return objectives and defining your personal tolerance for risk. Next, select ETFs that track either broad market indices or sector themes you understand well, perhaps an S&P 500 fund for full market coverage or specialized ETFs in healthcare, technology, or other growth industries you believe in. Commit to a disciplined schedule of monthly contributions, which not only instills a healthy money mindset, but also steadily builds a diversified portfolio that inches you closer to your wealth creation goals. This consistent approach reduces risk, enhances your financial discipline, and lays a solid foundation for generational wealth. 4. Government and corporate bonds. In the turbulent financial landscape of 2025, U.S. Treasuries and high-grade corporate bonds shine as beacons of safety and steady income. When you purchase Treasury securities, you're holding a promise of periodic interest payments from the U.S. government, arguably the world's most trusted borrower. Corporate bonds rated investment grade let you capture yields slightly above Treasuries while keeping risk firmly in check. You don't have to buy individual issues one by one. ETFs like TLT, Treasury ETF, and LQD, Corporate Bond ETF, let you access a broad, professionally managed bond portfolio with a single trade, streamlining your asset management and ensuring you benefit from a diversified, income-producing bond strategy. Investing in bonds brings clear, powerful advantages. First, you lock in a fixed interest rate for the life of the bond, from months to decades, delivering a predictable income stream that lets you plan your finances with confidence. Second, U.S. Treasuries serve as a virtually risk-free safe haven when stocks tumble, while top-rated corporate bonds offer higher yields to help offset inflation and opportunity costs. This blend of safety and steady return is ideal for a prudent money mindset, protecting your principal even as you earn more securely than with high-risk assets. But the true magic of bonds lies in how they stabilize your entire portfolio. When equities dive, bond prices often hold firm or even rise, thanks to the flight to quality effect, so you minimize losses and keep that passive interest income flowing. And with a reliable coupon schedule, planning your retirement spending is simpler than ever, empowering you to build lasting wealth and leave a stable legacy for the next generation. To get started, open an account with a trusted U.S. brokerage firm and dive into the bond options that match your return goals and risk comfort. Consider the powerful strategy of bond laddering, staggering maturities from short to long term to smooth out your cash flow and capture the best yields at every rung. You can also harness dollar cost averaging by making regular investments into bond ETFs, sidestepping the temptation to time the market and sharpening your financial discipline. With this approach, you'll enjoy steady interest payments today and reinvest them toward building genuine long-term wealth. Government and corporate bonds are the irreplaceable pillars of any middle-aged investor strategy in the U.S., not just for rapid wealth building, but for safeguarding your hard-earned gains and securing a dependable income stream in retirement. By weaving bond holdings together with real estate, blue-chip stocks, and ETFs, you strike the perfect balance between risk and reward, propelling you steadily towards sustainable, systematic prosperity. Start your investment journey today to turn your dreams of abundance into reality, all while preserving the lifestyle and financial plan you envision for the future. 5. Cryptocurrency. In recent years, cryptocurrency has emerged as an electrifying investment avenue, especially for middle-aged investors hungry for returns beyond traditional channels. It's not just about market leaders like Bitcoin and Ethereum. A universe of thousands of altcoins awaits, each built on its own blockchain and powering real-world DeFi and NFT applications. With trading open 24/7 on global exchanges, you have the freedom to pounce on opportunities at any moment. Plus, staking rewards and DeFi lending can unlock fresh streams of passive income, inviting you to ride the cutting edge of finance and potentially supercharge your wealth journey. The most thrilling edge of crypto lies in its capacity for jaw-dropping gains, fueled by halving events, major network upgrades, or waves of institutional capital pouring in. When powerhouse investment funds and leading tech firms weave blockchain into their core operations, the price of these digital assets can skyrocket, delivering wealth creation on a scale we've never seen before. And thanks to rock-solid liquidity, you can flip between cryptocurrencies and stablecoins or cash out to USD in mere minutes, giving you the freedom to manage and reinvest your money with lightning-fast agility. The real power of cryptocurrency goes beyond lightning-fast asset growth for long-term holders. It lies in its ability to supercharge your portfolio's diversification, easing your dependence on stocks, bonds, or traditional real estate. Even a small slice of leading coins can act as a potent lever, helping you forge generational wealth while shielding your investments from inflation and market turbulence. And as Bitcoin and Ethereum win broader acceptance in everyday payments and are woven into mainstream financial products, your stake doesn't just rise with supply and demand, it climbs on the back of groundbreaking technology reshaping the world. However, to steward your wealth effectively, you must master investing and asset management in a high-volatility arena. Crypto's wild price swings can send values plunging overnight, so arm yourself with a rock-solid money mindset and a prudent defense plan. Embrace dollar-cost averaging, deploying fixed sums at regular intervals to neutralize the perils of market timing and reinforce your financial discipline. And remember, cap your crypto allocation to a defined slice of your portfolio, then balance it with steady yield assets like bonds or ETFs. This blend shields your capital when markets falter while keeping you poised to seize the next upward surge. To kickstart your crypto journey, choose a reputable exchange with clear KYC/AML procedures and robust two-factor authentication. Safeguard your assets in a cold wallet to keep hackers at bay, while a hot wallet makes daily trading effortless. Dive deeper by staking on DeFi platforms or locking funds in liquidity pools for attractive yields. And stay ahead of the curve by monitoring macro news, emerging tech trends, and evolving regulations. With a disciplined strategy that blends deep blockchain know-how and a long-term mindset, cryptocurrency can become a powerful engine for sustainable wealth, fueling generational prosperity for you and your family. Thank you for staying with me until the end of this video. I hope these 5 investment channels for 2025 have shown you how to earn smartly, striking the perfect balance between growing passive income and protecting your capital. Drop a comment below telling me which channel resonated most with you and any questions you have about managing your assets so we can learn together and elevate our money mindset. Don't forget to subscribe and hit the bell so you won't miss the next secrets to building lasting wealth. I'll see you in the next video with even more valuable insights.